us to dig through these numbers right now is Brian Nagel. He is senior research analyst at Oppenheimer. And Brian, we saw this yesterday with Walmart, with Home Depot, and now we see it with Lowe's, and maybe to an even more extreme kind of level at what's been happening with Lowe's. What do you think?
I agree with all the comments you just made. I mean, this is absolutely amazing. And when I was looking at this coming through my screens here, the first prediction was maybe there's a mistake. You know, for Lowe's to be doing a domestic comp of 35.1%. Again, you know, and Home Depot set the bar very high yesterday with the 25% domestic comp. The Lowe's 10 percentage points better. It's absolutely amazing. Like I've never seen anything like this before. But look, I think it just speaks to this is what we were discussing yesterday, just how upended and disrupted this consumer backdrop is, with so many people spending so much more time at home and now spending on their homes. I mean, clearly Lowe's is, just like Home Depot yesterday, is really capitalizing on this trend.
One thing the company has said is that it withdrew its financial guidance for the entire fiscal year. That happened back in May because of the limited visibility into future business trends. As Brian Sullivan pointed out, they are saying that these trends, these incredible sales trends, continued in August. But what do you do as an analyst when you try and figure out what's going to happen in the current quarter?
Oh, look, that's a great question, Beck. You know, I'll say a couple things. You know, I'm getting a lot of questions from our clients to whether companies like Lowe's would issue guidance. And my answer has been no, largely because they don't have to, right? Because right now these companies are all getting a pass on having to issue guidance. So, but it was very interesting is how Home Depot traded yesterday. And I think that's going to be something, say something about Lowe's today. Home Depot puts up this 25% comp, extraordinarily strong quarter. Comments on their conference call, no signs of weakness whatsoever. But as the day progressed, the market starts to worry about, fret over the sustainability of these trends. I think that same dynamic will happen here with Lowe's. But again, when I've seen this release and the forward-looking comments that Marvin and his team made in the release, this business is not slowing down whatsoever as of right now.
So what do you do with the stock? If you think that the trend is likely to continue, right now that stock is up by more than $2. It's a gain of about 0.7% or 0.75% right now. Would you buy the stock here? Would you wait for it to come back in? What do you tell your clients?
Quick answer is I'd keep buying them. This is both Home Depot and Lowe's. I mean, my view is that this strength will persist for a while. Now, inevitably, sales will slow, but I think we're pushing into somewhat of a new dynamic where people, you know, even after this pandemic hopefully passes, you know, and vaccine or whatever kind of event, I still think there's going to be a dynamic where people are spending more time in their homes, and that's going to help to bolster this business. So I would keep buying these stocks here. They're definitely more expensive than they were a few months ago, several months ago, but they're still not completely out of whack from a valuation standpoint.
Brian, all of the market share that these companies are taking, Home Depot and Lowe's, who are they stealing it from?
Well, look, okay, so there's smaller players out there. You know, what's interesting, Home Depot and Lowe's have really dominated the home improvement space for years, right? But they still only have, by our estimate, maybe half the DIY space. Okay, so there's smaller players who are taking share from there. But as these companies both push into the commercial space, and that's really catering to the smaller home builders, smaller remodelers, that's a much more fragmented sector. You know, so there's a lot of opportunity there. But then I think the other thing that's happened here is just a shift in spending. You know, sure, as we think about it, we're spending. We're not traveling right now. We're at least not traveling as much. We're not getting out as much. We're not spending on sporting events. So those dollars that would normally be spent on those activities are shifting to the home. You know, so there's that. So there's all that coming to play for a company like Lowe's right now.